ahead of the conference call. Mondelez CEO Dirk Van de Put. A lot to get through here, Dirk. It looks like the sales growth was very strong, more than 5% organic growth, though margins being hit by some of those cost inputs like we're seeing across the board with inflation. Talk to us about how you're characterizing the quarter.
Well, we see it as a good quarter in the sense that our top line was excellent, and that was a mix between volume growth and price. And in the last quarter, Q4 of last year, we didn't price that much yet. That is still to come. And that led us to a reasonable margin. Yes, I know the percentage margin went down, but we still grew our margin in dollars by close to 3.6%, which is really what we're looking for. In a typical year, we like to grow our gross profit dollars by 4%. We were at 3.6, just below. And we were able to increase our bottom line by 5.8% for the year. So I would say from a financial perspective, we feel pretty good, seeing the circumstances of high inflation, supply chain disruption, and so on. And then on top of that, we have market share increases. We had very solid cash flow. We returned $4 billion to our shareholders in dividends and share buybacks. And we were able to increase our investment in our brands, in sustainability, and so on, versus 2020. So healthy financials, good investments, good cash flow, a little bit shaky on the cost side, but I think we will get through that with some price increases and some cost management. So overall, we feel good.
I was just going to say, so how sustainable is this kind of sales growth, which you're seeing very strong in many parts of the world? And are you getting that kind of pricing power that you need?
Yes and yes. The categories we're in, which are mainly biscuits and chocolate, throughout the pandemic have seen an acceleration, and we see that continuing into the new year. Where we have priced, which is largely in emerging markets, you can see very strong results, more than double-digit growth for us. The price increase in the US has just started in January. Europe, you will probably see the effect of price increases in Q2. But overall, I would say what we see from the consumer is that they are very aware of the fact that there is inflation and that prices are going up. But their spending has changed. They like to snack more. They're buying more biscuits and chocolate. So the price elasticity is very low. There is really not that much effect on volumes when you increase your prices. So we think it's sustainable. We believe in the second half of this year, inflation will start to ease. So there won't be a need for these big price increases. And then we will gradually return to a more normal situation. We expect fully to deliver on our financial algorithm also in 2022, while we continue to increase our investments in our brands and in our people and in our sustainability.
Dirk, do you expect to see any opportunities to add to your portfolio in the volatility that might exist ahead?
Yes, we do. We have to be financially astute and disciplined. But yes, we think that there are opportunities. We have a good track record. We have added 4 companies to our portfolio during the past year. I think the founders often stayed in and are working with us. They're happy with the relationship that they have with us. And so we think we have a nice record of results, a nice track record of being good partners. So I think the opportunities will be there for us to keep on adding to our portfolio as long as the valuations remain reasonable.